And market moves last week reflected optimism surrounding a Federal Reserve rate cut. The $14 trillion Wall Street rally to new records is seeking a Fed cut playbook. But at the same time, the run-up in safe assets points to worries of severe global economic slowdown from the US President Trump's policies. Gold, let's start there. Once again, it was the top asset of choice last week. The yellow metal gained another 1.1% to a fresh record high last week after surging 3.5% in the first week of September. And that comes post the 5% rally in August. Then crude oil reversed the trend to gain 1.8% in the September 8th week. And that is mainly on worries of crude flows from the threat of sanctions on Russia. Bitcoin, on the other hand, continued to hold its ground and rally last week. The OG token is closing in on $117,000 with the all-time high of about $125,000. Despite millions of dollars in revenue from tariffs, the US currency extended its decline last week. Moving on to the Asia-Pacific stock markets, barring the Aussie benchmark, regional indices gained. Japan's Nikkei was the top gainer, up over 4% last week. China's main stock index reversed losses to close out with a 1.5% gain. That rise points to a similar trading pattern seen in August when the benchmark rose 8%. Indian stocks extended their gains, rising 1.5% last week after posting over 1% gains during the first week of September. Next, coming over to the Americas, Wall Street stocks hit fresh record highs in a $14 trillion rally. However, the bull run hinges on the Fed cutting rates in the coming week for the first time this year. Similarly, bets the Bank of Canada will lower rates by 0.25% had the country's benchmark stock index up nearly 1%. But the Brazilian benchmark reversed to edge lower. US tariffs are starting to bite and reflect in market moves there. Now, across the Atlantic, European stocks reflected broader optimism. The moves in benchmarks across the region showed a reversal in fortunes for investment, although the gains were only marginal compared to losses during the first week of September. The South African stock index too reversed to gain nearly 3%. And turning attention to the overall economic outlook, let's look at the Asia-Pacific region. Trump's trade war worries have weighed on the outlook for global economies. In Asia specifically, India is still expected to be the fastest growing major economy in the world. While Trump's tariffs weigh on growth, the country's cut to taxes is expected to give economic activity a boost. However, the outlook for the rest of Asia remained negative. For China, the outlook is still mired by doubts from the recession in its real estate crisis. The economic outlook for Japan and Australia mirrored worries from Trump's trade war. In the Americas, the economic outlook for the US, Canada, Brazil and Argentina shows that trade tariffs are likely to hurt economic growth for the US economy. Recession bets are back after the latest jobs data showed a deteriorating outlook, even as the Fed is widely expected to cut rates this week. Inflation risks are likely to keep investors worried. Separately, the economic activity expectations for Canada, Brazil and Argentina were also cut. Now, on the other side of the Atlantic, the negative outlook was more widespread. The expectations show the clouds are darkening again for the UK and other European economies. As feared, Germany's June quarter GDP data saw the economy falling back into an even worse contraction. The size of the German economy is currently still slightly below its 2019 level. All right, for more on this, I'm now being joined on World Business Watch by Mr. Jayant Krishna, who's a Senior Fellow, Center for Strategic and International Studies. You're joining me live from New Delhi. Mr. Krishna, always a pleasure speaking with you. How do you see the markets reacting to the central bank actions this week, especially from the Federal Reserve?
I think investors are, betting, on the Fed interest rate cut. It's expected to be about a quarter point cut. And it is the first significant move since Trump, came to power in January this year. So I think if you look at the three indices, the Dow Jones Industrial Average rose by 1% for the week. S&P 500 and Nasdaq Composite, they've shown the best performance last week since early August. For over a month, they've shown the best performance. Gold, you have just now mentioned about how it's setting fresh records. So I think people are betting for it, and I'm sure. There are some negatives, you could look at because, there's some tariff-led inflation in the US. And also the labor market data, if you look at the jobless claims are perhaps highest, which the country has seen in the last 4 years. So, and some of the valuations have also been lofty. I think these are the reasons, I would feel that despite, what the rally that you saw last week, I think, it may not sustain, it may not continue for long, unless the job data, especially the manufacturing data, shows that the economy is bouncing back, which doesn't appear to be the case right now, Shivan.
Understood. Mr. Krishna, also, do you see the current rally in US stocks continue despite more evidence of a slowing economy?
I don't think so, Shivan. What I said just now, if you look at job data, which is worst in jobless data, which is worst in the last 4 years. If you look at manufacturing data, earlier there were some signs of recovery, but those the official data has not come as yet. Some of the valuations are very lofty. And also the tariff-led inflation, this tariff which has been imposed all over the world, eventually, there'll be some inflationary effect on the US customers, the consumers, as well as the industry, which buys, which imports stuff from all over the world, China, India, and European Union and elsewhere. So I think I don't think this rally will continue, will sustain for long, Shivan.
Understood. And coming to the Indian markets, what's your outlook for the markets this week?
So if you look at last week, it was quite encouraging. The Nifty 50 was rising for 8th consecutive session. If you look at BSE Sensex, S&P, it closed 0.44% higher at 81,904. If you look at the NSE Nifty 50, that also increased by 0.43% and closed at 25,114. So I think it is good, and even the outlook for this week, I see a lot of hope because although our markets are not that tightly integrated and connected with the US, but the Fed interest rate cut in the US will have a positive impact in India as well. And also there's a lot of hope about the revival of US-India trade talks, I think, which the market is likely to react quite favorably. And let's not forget the GST enthusiasm has not died down, as yet. There is a renewed investor confidence. If you look at FIs, how they have behaved, they have been net buyers in the last few weeks, which is good, and overall a robust macroeconomic performance and indicators are all positive. And I fundamentally believe that, the undertones are positive and the bullish trend will continue, Shivan, in the Indian stock market.
Understood. As far as projections are concerned, or what's there on the horizon between India and US, and of course with the GST enthusiasm still, that wave is continuing, and it will at least till Diwali, and then we'll see how this goes forward. It seems that things are only on the way up as of the Indian markets are concerned. But thanks so much. That was Jayant Krishna joining me here on the broadcast.